Hey everybody, welcome back to Rehash, a Web3 podcast. I'm your host, Diana Chen, and today we're speaking with a duo with the same name, Andy Boyan, who you might remember from season 4 of Rehash, and Andrew Redden, who's appearing on the podcast for his first time. Andrew is a co-founder at Last and a founding contributor at Hypurr Finance, and Andy has been working with the team at Last and now with Hypurr Finance since about early 2024. We kick off the episode with a bit of a backstory on how these two got on the pod for season 10, and then we do a deep dive into the recent Hyperliquid airdrop, which was one of the largest and most successful airdrops in crypto history. And they then talk about why they, along with their team at Last, have decided to build their new lending product, Hypurr Finance, on the HyperEVM and in the Hyperliquid ecosystem. Both of these guys have been in crypto since the early crypto days and are a wealth of knowledge when it comes to DeFi and market cycles. So if you're interested in hearing the latest ecosystem goss going on in the DeFi world, this episode is for you. Don't forget to join the Rehash community on Telegram at t.me/rehashweb3 to chat with fellow listeners and stay up to date on all Rehash news, including when the next round of guest elections will be taking place in early 2025. We are also currently looking for sponsors for our upcoming season of the podcast. So if you or someone you know is interested in tapping into the Rehash community on a deeper level, please email us at rehashweb3@gmail.com or find us on Telegram. So without further ado, here's my conversation with Andy and Andrew. Hope you enjoy. Andy and Andrew, we've got the double Andys here today. Welcome to Rehash. I'm so happy to have you guys here.
Great to be here. Thanks for welcoming me back.
Of course. And Andrew, first time here. So happy to have you here with us. Andy, thanks for bringing Andrew on. Before we dive into all of this hot ecosystem goss, I want to talk real quick about how you guys got here. So this is actually kind of a cool story because as listeners know, the way that we get guests on the podcast is by nominating them and voting them on via our quarterly joke race contest. And so what happened this season, or this current season, season 10, is that DeFi Beats actually submitted a nomination for mystery guest TBD. There was no name attached to it. And how he was going to determine that was through a hats game, which ended up being this murder mystery game that he ran in October around the time of Halloween. And so Andy, of course, participated in this because he can't say no to a good game ever in his life and won the game, of course, because again, he's, you know, the master of the games. Talk a little bit about what that murder, how you got signed up to this, like what that game was, why you wanted to play it. And then
first, I nominated, so I've been a longtime Rehash member and NFT holder, and I nominated Andrew, and we were close. We were so close to getting this season. But like the last minute, the voting is the most fun part, like the last minute machinations and everything. We didn't get on, and it was no big deal. We'll get on another time. I'll do better at my bribery of David and other people that take bribes. So I've had my eye on this for a while. Like I came on with Infinity Keys a couple years ago and wanted to bring Andrew on and talk about what we've been building. I was keen on the mystery guest submission, and they did say in the description that like there will be some sort of contest to get on. And so I had my eye on it. And then we started chatting actually in the Rehash chats about like what kind of games would be good and how do you design a good game for this? And I have a lot of input on what makes a good game. Did give a couple of suggestions. Murder Mystery was not among my suggestions. He kind of surprised us all with that. But then the opportunity to get on and jump in. And so I had to find a team. And so there were like 5 or 6 people I had to recruit. And then I gave them roles using hats. So thanks to the Hats protocol for sponsoring this too. And then each of us were given a different description of the night according to our roles. Then we got together and chat and we, did online, well, not offline, online Telegram, off-chain stuff, just kind of figuring out what happened and putting the pieces together. Yeah, and that was it. And then we had to figure out who done it, why they done it, and I think where they done it or something like that.
How were you able to recruit the people for your team? Did you offer them any rewards, offer them a spot on the podcast? Like, how did you get people on board to help you with this?
I have a long history of game design and recruitment because of Infinity Keys. And so I went to the old homies. I went to the old Chair and OX Joshua and other folks who I knew were in the eco. I think I got Meg from Gitcoin too. I think she was on the team. I got a couple of people.
Oh, she was. I didn't know that. We could do a little insider trading business over here. So a little backstory too about the murder mystery game. DeFi Beats had actually recruited a small group of us from the Hats Proto DAO to help test out the game. I think he just wanted to make sure that the game was solvable and it wasn't going to take you guys like a month to solve it, or it wasn't going to be too easy and take like 5 minutes to solve. So he got a small group of us to try and play the game over a weekend, like before he launched it. And I don't think any of us actually solved it.
Well, I did. We figured it out. We put all the pieces together. I knew it was one of those times where I just had to turn off all my notifications and think about it real hard. And then he was kind of nudging me like, first one to get it wins. And so I just, made it happen, put together a smart guess, and yeah, it worked out.
That's awesome. Glad we were able to make it work out. And of course, there were the rules around who gets to come on were pretty loose. And so you could come on yourself, you could give the spot to somebody else, you could come on with a group, you could bring somebody with you. So you brought a friend. And now we have Andrew Redden on with us. And I'm really excited to chat with you guys today about what you've been working on. I don't think this has really been out there yet very much. And so this is one of the first times, if not, is this the very first time that you guys are speaking about this?
Yes. I mean, we made a little bit of noise on Twitter, as one does, but, ultimately this, I think, is a good opportunity to amplify and showcase what this new product that we're building is all about.
I'm super excited. I've seen some buzz on Twitter, mostly regarding cat memes. Who knows what those are supposed to mean? They proliferate all over crypto Twitter. Before we get into the HyperFi stuff, why don't we start with just talking about that Hyperliquid airdrop that happened recently, because there's definitely, HyperFi ties in really well with that. So before we get into the airdrop, can one of you just give us a rundown about what Hyperliquid is?
We have a really strong thesis around airdrops, and most of them are done poorly. And not because there's necessarily bad intentions, but like they just kind of don't work the way most projects do them. Hyperliquid had an airdrop a couple of weeks ago over Thanksgiving weekend in the States, or like the Thanksgiving week, and it was done really, really well. What kind of excited us about it is this was done really, really well, not just because it gave people a whole bunch of money, which it did, but the way it gave them funds and the types of people that were airdropped, and then what they did with the funds after. That's the real story. That's like really, really cool. That makes this like an exception to most airdrops. And as of recording, there was just a couple yesterday that have all kind of been down only. They're a little fishy, like they don't work that great all the time. But this one was really, really cool. But I'll let Andrew kind of talk about the actual mechanics of it.
The whole Hyperliquid ecosystem, first off, for those that don't know, Hyperliquid is a perpetual exchange and recently launched a spot exchange. It is a new emergent player in the overall exchange landscape, but it's a lot different than your typical exchange that you may be used to. It's pushing towards aggressive decentralization. It runs on a chain itself, whereas most exchanges, that's centralized ones, are just servers aren't distributed. They took no venture capital investment, so bootstrapped entirely by the founding team itself. They were very fortunate from some of their previous endeavors to be able to do this. But what that meant is that when the airdrop happened, users of the platform over the last 12 months or so, is that the 31% of the supply that was airdropped was dropped entirely to users. Anybody who wanted to give the team money, paraphrasing here, but was essentially told to go get in line and buy it from the market with everybody else. They refused venture capital investment a significant number of times, to my understanding, over the course of the last 18 months of building. This is huge. Like, we haven't seen anything this fair in terms of an overall airdrop mechanic. The team does have an allocation for themselves. It's locked away for a year before it can be utilized. And so all the price action you're seeing in the market is real, true demand. If you look at most charts that happen from post airdrops, I know we had a number the last couple days. Typically, they are, the unfortunate down-only design. The Hyperliquid chart looks like crime. It is up only. It looks as though the sell button has been disabled for people. This is causing, beyond just memes, profound effect on our industry, actually. I think people are finally realizing now that there is a way to reward users with a profound wealth effect, and designing a system that actually utilizes the asset that you want to give out in such a way that it benefits beyond just tangentially the user base in a really profound way. The overall economics of the ecosystem are deflationary. So it's designed by, its core inception that the token supply goes down over time. There's no inflation today built into the ecosystem. So users that were a part of that initial airdrop set are the ones that are currently standing on the fortune.
And not just that. So like they built the product and launched it. And we talk a lot in crypto, like in crypto Twitter about like, oh, we need better UX. We need better UX. They made a great product without a token and attracted people to it and like brought people to it to use the product. And so they're real, genuine users. And I feel like most of the time when we talk about UX, it's really like around consumer wallets and onboarding. This was just about the straight up trading product and the perpetuals exchange and liquidity that's there and like how fast execution is and all that stuff. And so when they airdropped, it was to a whole bunch of people who really wanted to use this product. And when they got the hype token, they just kept using it and they just started trading the hype token too and buying more. And like, is the way it's supposed to work. Like that's how it's kind of supposed to work, is like, oh, you're using this thing, you're building it up, there's the community. And then it came out. So it was just this really profound moment to see, especially like the week after when token didn't go down. I was like, nope, the users just kept buying it. And because of that thing, like if another exchange wants to list it, if a VC wants to get it, you just got to go buy it. You got to get on Hyperliquid to buy it too. Like there was no other place to buy it. Like it was such a really interesting mechanic and different from what we've seen. It really kind of took us aback a little bit.
Yeah, I'm really glad we're talking about it now. I feel like this is the perfect time because we've had has it been a couple weeks, maybe a little less than 2 weeks, to see how it's played out post the initial airdrop launch. And it's held strong, like you guys have said. I want to back up real quick. Yeah, there's so much to unpack from everything you guys just said. I want to back up a bit and just make sure that we're also, just making this understandable to some of the DeFi noobs out there. I know as the market is coming back and there are more and more new entrants into the space, I do just want to make sure that we're making this as friendly and understandable to the general public as possible. So just to back up, Hyperliquid, you said, is a perpetuals exchange. They recently launched a spot exchange as well. What is a perpetuals exchange and what is a spot exchange? And are there any other products out there today that, especially, people newer to the space might have heard of that are similar to what Hyperliquid is?
Perpetuals exchange, we'll start there. Ultimately, it's a place to buy and sell a derivatives contract. So they're often coined as being perps. And so really what it is, it's your ability to bet on the outcome of a market. So you can choose to go long or go short. If you're going long, you're buying the right to sell in the future. And if you're going short, you're buying the right to buy. A strange concept if you think about it at first, but really what it is it's different than holding and buying Bitcoin as an example. If you hold Bitcoin, you actually have the asset. You can take it off the platform. You can put it in a wallet, use it for collateral somewhere. You have things you can do with it outside of just it being in an exchange. Bitcoin maybe not the best example of that. Look at Ether, DeFi, all the things that come with it. But you can actually leave the exchange, I guess, is the prime understanding I want people to take away. With a perp, you're buying a contract. You're buying the right for future execution. Your contract is actually tracking the market value of the asset that you're buying the contract for. So if you buy something for $3,500, you want to go long on the price of ETH, you buy one contract at that price, it costs you $3,500. And if the price goes down, you lose money when you sell that contract because that's the only right you have. You actually have an obligation to sell your contract at some point in time in the future. It is more akin to gambling than it is to anything else. And so futures markets are typically associated, at least in our ecosystem, around perpetuals contracts. Now, in typical finance, there's no such thing as a perpetual. Perpetuals trade freely as though they're the asset without actually being in the asset. I often use the term buying a futures contract or a perpetuals contract is really just holding a bag of sand in the water as the waves roll over it because you have a claim to nothing and you're paying money to have a claim to nothing. You're just hoping that the market goes the way that you want it to so that you can sell your claim for future rewards. Now, a spot exchange is what most people are probably accustomed to if they're buying and selling any digital asset or a stock as an example. Typically, stocks are under the spot exchange type of thing. You buy a stock, it's yours. There is a supply that you're buying into. So, with the supply of Bitcoin, 21 million, when you go buy one off the exchange, you know that you've bought one of 21 million Bitcoin. When you buy a perps contract, perps are backed by, money. And so however much money is flowing into the system is the total supply of contracts that exist that are out there. And so when we talk around perps and we talk around spot, we're talking around the supply that you actually are tapping into. One is money gambling. The other is actually speculation on the actual true asset itself. Both are kind of speculative in nature, but one is actually, talking around the acquisition of the currency or the asset where the other is, purely purely gambling.
Here's what's really interesting about Hyperliquid in particular. It's a decentralized perps exchange. Now, how decentralized, like how many validators? It's on chain. It runs on its own chain. It's got its own L1 blockchain. And there's some number of validators. And right now we think they're managed by the team, but they're working on decentralizing that and making that open. And so the experience, like the actual trading experience, it's like going on Binance. It's like going on Kraken, on Coinbase. That's what it feels like. And so you're used to a DEX like Uniswap, it's like an AMM, where you just swap two assets. Maybe, there's some, craziness on some that you do three, but most people, they just swap the two assets. This one, it feels like you're on a centralized exchange, and it's fast. It's really responsive. It has good execution time, so you're not going to misprice. Slippage is really, really tight. If you've done Uniswap, like your slippage can be big, especially on low liquidity assets. So that's what's different. It's like, it rivals, if not slays outright, the experience on Binance, on Coinbase, on Kraken. It's good. It's snappy, but it's still like this decentralized moment. And that's what's exciting. That's what's really exciting, because once we start adding on-chain stuff to it, well, the opportunities are just massively scaled. Like there's this additional layer to it that is so magnified, which is why we're building on it, is because it's not just an exchange. It's like, more than that based on this initial thing.
To kind of touch on that for 1 second there, like as a user, you sign in with your wallet, you sign messages to transact. Everything that you're used to doing in DeFi is brought kind of into this, like the exchange is like not a true Web3 in terms of your interactions. You're not like making transactions. You sign messages, which authorize your application experience to do different things. You want to withdraw and, whatever, move between different ecosystems. You still have to have some action, but you get like such a snappy, amazing experience that you actually forget it's crypto related whatsoever. And that's, I think, what sucked me in as an early user, was just the fact that like I can transact with my wallet, interface with my wallet. It's still like what I feel like is my domain of control is still very high for myself. And they've just made like a smashing good experience, which really makes me quite bullish on the future opportunity here.
Yeah, it's incredible that they were able to do it all bootstrapped too. Like that's super impressive. I wonder, I'd be curious just, for my own gossip curiosity, who the founders are and where they came from and how they were able to make this happen with what they had.
Yeah, there's, some of the team is a mystery. The very public individual, his name is Jeff on Twitter. He's at Chameleon Jeff. He is a meme lord in his own right, whether or not he wanted to be of the ecosystem. Jeff is our unsung hero. The current running meme
very
right now.
Sung now.
Sounds like it.
The current running meme is we're all renaming our children Jeff. So sorry to my daughter there, but
granted, so David Phelps posted a tweet during the Hyperliquid airdrop that said, if we want to normalize not having VC, you have to also normalize having wealthy founders. They're probably just fine, and they can pay their bills for 18 months and 2 years and hire devs without having to get outside money. So that is a piece of this, but it's a benefit to spinning up projects and doing this sort of idea. And there's a tough balance there. So like, I'm not advocating for everybody to do that. It was not in my means when I did Infinity Keys. I needed to raise some funds. So I do understand that, but this is how it came to be. It is a piece of that equation.
We're not advocating for everyone to bootstrap, but we are advocating for everyone to get wealthy enough that they can bootstrap.
Absolutely, right? So I was going to say that with the origin story of Hyperliquid, Jeff was recently on a show. I can't remember the name of it for the life of me, but I'll pass it along so you can include it in the show notes or whatever. But he talks around his background was basically becoming a market maker in 2020. He's an admitted not great developer. Came into this, really as a mission and a drive to just do better than the current market makers of the day, and ended up essentially creating a strategy that is highly profitable. So market making between different ecosystems. DeFi really took hold of him in the post-FTX collapse, really trying to understand like how the systems could be designed better to prevent this from happening again. So I think that was what really drew a lot of it in. I don't like speculating on anyone's wealth or position or capital, but it's clear from how he talks that the market making side of the equation, was very beneficial for them as a whole, and what actually allowed them to be comfortable to take the risk of building Hyperliquid without venture funding. So like literally congratulations and kudos to them and that team. It is a profound success story to one thing, make your money market making, because it's a dog eat dog world. It's not easy. But then also one part we haven't mentioned around Hyperliquid is that there's an internal market maker to the protocol that most likely comes from the strategy that they created. They gave it to the community. So it makes fees, but they don't own any of the fees. The fees are all owned to the depositors, and it is currently insanely profitable. Yesterday, here it is, it was the 9th of December. We had a flash crash in the markets. The market maker did not miss a beat. was there buying and selling the whole way, and it, 24-hour profit is $2.1 million to depositors. I think it's standing somewhere around like 53% APY for the year. This is insane performance, let alone to be performance that's given away to the community. So I think it just speaks volumes to the intents of the team, where they're really trying to create this ecosystem that is all encompassing, not just like wrap a token around it and get liquidity and whatever it may be. I don't buy that is like a running narrative for them or a reason for doing. I think this is truly to try and create an ecosystem that cannot happen, so that the FTX of tomorrow cannot happen. Literally just changing the exchange model. And I would have to bet if you're a centralized exchange, you're looking at the Hyperliquid ecosystem and you're going like, holy shit, what has actually just happened? Because I think we have a real competitor on our hands that we have no ability to control.
One question I did want to ask is, so a lot of times I think when people hear, oh, they gave away 31% of their supply in this airdrop, which is just for reference, I think typically exchanges or protocols will give away maybe like 5, 10, 15% of their total supply, not 31%. So they've given away more than double or even triple what most would give away in that initial airdrop. When people hear that, I think they might think they're giving away so much. Like, where is this going? But what's your, I guess, take or analysis on how this strategy of giving away even such a high supply initially to the community can actually bring them more profit long term? Like, how does that all play out?
They made their users incredibly wealthy. It's like a flash in the pan or a lightning in the bottle moment for them, and they captured it very well, where they had a significant advantage than most will find. And so I want to frame this. While I think their approach was very good around how they distributed value, I think it's going to be very hard for teams to replicate it like ad nauseum in terms of how they did and what they did. And I think the reason being is no venture capital investment is very hard to do. Having a product that is as sticky as it is, prior to the airdrop even being announced a date for it, they had $1.1 billion in the protocol. So people were using it. They had very sticky users. They were capturing the trader mind share. But really, I think it comes down to is they knew their users' persona so well as a result of them coming to the protocol and trading, wins, losses, whatever you may be. A trader is a trader, will show up. And if there's a market there, they'll participate. Giving away all this to the user base creates a reflexive flywheel that most people only ever can dream about. As demand for the asset increases from external parties, these VCs or interested parties that could not buy exposure to the ecosystem beforehand now need to go to the order books and buy it just like any other trader would have to. It means that the wealth is being distributed directly from party to party with no need to interface with the ecosystem. The ecosystem naturally acquires more ownership in Hype through trading fees. It reinvests into the insurance fund. So it's already providing scarce demand on the asset. And if it's all in your user bases who are currently potentially want to sell it, if they do want to sell it, the likelihood of them actually exiting that money is so low because they're a trader. That's who you gave the initial drop to. There's a really good chance that any dollar that they get, they're going to turn around and put back into the market as a trader. You just literally increase their overall, betting capacity or investing capacity. And this is, I think, where a lot of protocol teams could actually glean some insights, where basically given their user base the exact thing that they need, and that's fuel. And that fuel is able to kick that flywheel back around for them. And which, the flywheel for any exchange is really just trading fees. And so, allowing for users, if they want to sell, they could always leave if they wanted and take their money and run. But most traders aren't going to. They're going to look at this as being like another opportunity to go and maybe double, triple my value, and whatever it may be. And this, I think, is the real captivative piece that people should take away from this.
And this is like what we've found. So when we go and we talk to these people who are traders, they're interacting with the system. So we're building a DeFi protocol that is going on to the HyperEVM. That's kind of like the thing. And we're trying to figure out like what kind of users will we get? And it's these traders, they don't want to leave. They want to use their capital. They don't want to sell it and like go somewhere else. They don't want to bridge it away. They just want to use it. They want to keep it in the system that made them wealthy and continue to grow it. And it's this unlock opportunity that we didn't see. It's not like, we did research on a whole bunch of things. It just happened to us. And like, especially Andrew, he was like in the midst of it and he pulled me in pretty quick. He was like, you have to get in here. You have to see what's happening. And I got into the Discords and into the channels and the Telegrams, and the passion there from the users, the memers, the builders, like it's this new thing because people are so passionate about keeping their funds and their attention and their energy in this system that it has started this beyond just the money flywheel and the incentives flywheel. It started this like engagement and passion and community flywheel. That's really exciting.
It's like a whole new breed of zealots were born. And, we are all now fighting the good fight of the Hyperliquid empire. It's interesting because, some of these people have gotten outsized airdrops and some of them have gotten, relatively smaller, meeker airdrops. But what's wild is that they've used the product and are in love with it. So regardless of their financial outcome that they've gotten, their mind is opened into the idea of that, wow, like what if the on-chain experience is just so good that I don't ever want to go anywhere else? Like I don't want to bridge to another ecosystem. Like, so who's building for this new country that I've discovered and found? And I want to go talk to them. I want to learn everything about them. I want to help them. Do you need roads? Do you need a moat built for your ecosystem? Do you need bridges? Like, how can I participate and how can I be that connective tissue for you? And that's what I've noticed coming in, having these conversations with some of these early builders. It's like, it's a very open, collaborative part in time of the ecosystem. Like PvP hasn't really started. There are no warring factions. The memers are already here at scale. Meme coin launches have been happening on the exchange since the spot marketplace opened. But it's really interesting to see this type of early chaotic energy. I have honestly not seen it since like late 2016 Ethereum. Ever since then, I've been wondering what was going to come and like capture that fervor and attention. And we would be having a much different conversation if after the airdrop happened, everyone sold and withdrew their USDC and just like left the ecosystem. Like, oh, look, not even this egalitarian system design can actually make it happen. But we're not seeing that. We're seeing people fall like more and more in love with the ecosystem, want to figure out what new DeFi primitives are coming. Hyperliquid wants to be, or HyperEVM rather, wants to be that DeFi superchain where everyone can come, has high throughput capabilities to build new lending models or new options protocols or whatever it may be that drives more value to this ecosystem. And so the energy is like, it's electric. And that's a big part of why I brought it to the team was like, I can't actually, like, someone else needs to come qualify this because like, I feel like I'm just getting drunk on the Jeff love that's going on in these different ecosystems.
Yeah, and Andrew's ready to rename his twin daughters to Jeff 1 and Jeff 2. I can already feel it. And not to pound this, how much money was really involved in this, but I do think that's a big part of it. And Brian in the chat said, making your customers wealthy will make them loyal. I just pulled up some numbers just to like give people a better idea of the scale of wealth that this airdrop actually gave to people. Because I think a lot of people have experienced airdrops where they maybe get a few dollars or maybe like a couple $100. And that really isn't the scale that you need to reward your people with to really make them feel a sense of loyalty to you. But I just pulled up some numbers and 310 million hype tokens, which is again 31% of their supply, was distributed to approximately 94,000 wallet addresses, which came out to be about 2,915 hype per wallet, initial price of about $390 USD per token. So on average, the average wallet, which was eligible for this airdrop claim, received a little over 11,000 US dollars in this airdrop. So I think that gives people a better sense of just how much was involved in this airdrop. And I think in the couple of days following the airdrop, Hyperliquid got over 10,000 new users. So of course, everybody heard about Hyperliquid through the airdrop, even if they didn't receive an airdrop. It probably enticed them to go check it out and become a user. And their total transaction volume on November 30th, which was the airdrop was November 29th. So just a day after the airdrop, their total transaction volume exceeded $3.44 million, which was a tenfold increase from before.
Do you know how crazy that is?
Yeah, that's
every
wild.
Every airdrop that came out yesterday, 3 came out yesterday, and every single one, I was like, oh, I missed it. And that's it. I'm not going to use that product. I missed it and I don't care. Like, it's over. And we've become so desensitized to airdrops. I think I qualified for one of the ones yesterday and I didn't check it because it was complicated to get into the wallet. And I know it's going to be dust. Like, I don't care. But when I heard about this one, it wasn't that I had a chance at an airdrop because everyone came to me and said, there's this crazy airdrop, but everybody's still using it because the product's so good. Then I went to check it out and now I've been using it. I learned how to do it. I'm not up, we'll just say, after the last couple of days.
Not yet, but you will.
But like, that is really different behavior in crypto.
Yeah.
Is people heard about the airdrop and then went to check it out as opposed to, oh, there's one coming up. I'll go farm that and then, we'll see whatever it is. It's totally flipped. And that momentum, that's what happened to us is like, we saw that momentum. We're like, we have to build here. The time is now. It is not like, we'll see what happens. It is happening now. And we're going to be in the thick of it right now or else.
Let's go ahead and dive into that. So Hypurr Finance, HypurRFi is this new product that that the last team is building on Hyperliquid. Talk a little about that. Give us an introduction to what HyperRFi is, because like you guys said at the start of this podcast, you haven't talked about it at all just yet. People have maybe seen a little buzz on Twitter, but that's about it. So give us the intro to HyperRFi.
So same thing, Andrew. I'm going to give like my high level and I'll let you get into it. So many of your listeners in the community know that we are building Last Network, and Last is its own chain. It's a DeFi focused chain where the revenue and the profit of the chain goes back into a very sustainable long-term incentives model. And that was basically built. It was like really close to being ready to ship when this happened. And we were waiting on a few things. And so the timing kind of lined up perfectly. But what ended up happening is one of the core pieces of the Last chain is this DeFi protocol based on a stablecoin lending protocol called USDXL. And we were able to take that right out of Last and just deploy it as a dApp on any chain. We could do it on any chain. We could do it on mainnet if we wanted. And so when this came up, this opportunity came up where Hyperliquid has their perps exchange, they're on chain, but then in a little while, we'll see when it is, might be a month or so, we're not exactly sure when, they're launching an EVM with a distributed validator set so that DeFi can be a part of this ecosystem as well, accessing that liquidity. That's what we saw as the opportunity. All this liquidity is there, all these users are there, and now there's a chain, and those users are asking, what else can I do with my funds? We had this ready-made, like it was like ready-made. We haven't launched, we've built community, we've got great contacts and all that. And so it was a really quick, moment. We got together with the team and like everybody together, like, are we doing this? Are we doing this? And Andrew, I talk a lot, you guys, but Andrew, he's very persuasive. This guy can move mountains, and he really felt the fire as well. And so once he onboarded a couple of us, we onboarded everybody else, and it's been full bore to it.
Yeah, thanks for that intro. Like, I think a big part of this is our broad mission that we have at Last. I want to make sure that that's, clear and out there, is that, we do believe in this new ecosystem design that is all around rewarding behavior, basically. We want users to participate and to be rewarded for that participation. Too many times we've seen ecosystems that just don't have good incentive models built into them. That, incentives or long tail sustainable modeling for their incentives is an afterthought. It's the Last mission. It was always around, what is this way that we can incentivize people? And our model was really built around this idea of external yield being how we actually go and encompass and provide for that value for our ecosystem. What we've realized, though, is that there's no reason why we can't also be a producer of that yield on some other ecosystem. So HyperFi rather is our kind of approach to that, where we say, this is our satellite vehicle inside of the Hyper ecosystem, where we want to allow for users that want leverage or want to, hedge their current exposure from Hype or from one of the LSTs or different DeFi primitives in their ecosystem to have a really sensible and stable vehicle by which they can do that. So it's a lending market that you'd be very comfortable using. It allows you to put collateral in, borrow against it, stable coins. As well, though, is that it allows you to do cases where you could borrow the native gas token, which is Hype, and use that to join an LST if you really want to go long on the validator rate that you can earn from participating. There's a number of these LSTs coming out. One of them's Stake Hype, and some other ones is K Hype. We're going to support a number of these LST products that come out to market. But really, it's looking at those that have already amassed wealth in the ecosystem or want to get exposure to this ecosystem, giving them a really easy, qualified way to do that. And so one of our vehicles for that is USDXL. And so this allows you to mint a stablecoin against collateralized assets. One of the unique parts of the USDXL design, though, is that it's a hybrid model. So a part of it is collateralized, like you might be familiar with, like MakerDAO's DAI or USDS. There's like Aave Go. They allow you to put assets into a market and borrow against it. In our case, what we do, though, is we take the revenue that we generate and we actually buy US treasuries, and we add that revenue that we're creating basically to the backing collateral of the whole system. So as the system is generating revenue, it's slowly over time moving its reliance off of collateralized positions as being the primary buffer for value in towards treasuries that are earning a composite yield rate. So we transform that yield that's being generated in a variable fashion from different ecosystems and stabilizing it in essentially real time into tokenized treasuries that grow the backing collateral. So users get access to a really healthy, stable coin as a result of this, but they still get access to the leverage and they have different aspects of exposure that they're interested in. And this is what we saw was a really big opportunity opportunity here. It's less around trying to be a competitive force. Our blood is really built on being a collaboration layer for, for incentive modeling around the different ecosystems. But HyperFi is really around providing a really clean service offering to those that are looking for exposure or to maintain exposure to their assets, but at the same point in time, get exposed to the broader aspects of DeFi. We're a lending market on HyperEVM. There will be others, and there'll be other stablecoins as well. And we look at working alongside of all these different players to basically grow the wealth of value that can be captured and created from this ecosystem. But then there's cool things that we expect will also start happening here that we haven't seen on other chains, given how financialized Hyperliquid is. Well, we're hoping we see things like options or other commodity exchanges starting to spin up. The chain is incredibly performant and has a ton of throughput and bandwidth essentially available for everyone that wants to build on top of it. And so, so Hyper is our way of actually providing value and being able to capture yield in the same point in time to really produce this stable asset for everybody.
Yeah, and I had a good question in the chat. What made you believe in the Hyperliquid ecosystem? So obviously, we've talked about the airdrop and all of that stuff, and that makes us really bullish. But I think, making the decision to actually build on the ecosystem is like a whole other level of believing in that ecosystem. What was sort of in addition to what we've talked about so far, was there anything else that really made you guys a believer that HyperEVM was the place that you would want this product to live? Is it really just like the people, like the almost cult following that they have so far, like that you thought would like that pushed you over the edge to build with them, or was there something else?
That's certainly a major part, but like when you go and look at the exchange, there was, like we said, not VC. There was not a whole bunch of like marketing, no KOLs, like none of this big push. And the product slaps. It is really, really good. And they don't come out and they don't like do, big events and all that sort of thing. They kind of keep to themselves, the team does, and they just ship product. And so when it comes out, it's like, okay, we're going to build the chain and there's not very much info out about it. Well, we rely on their past work, like their work. It's really good. And here's what they're doing. And then they release a testnet, and testnet had, is a little clunky because there was so much demand. They're working on that. They're fixing it. And so that's also a big piece of it. It's not just the community, but keep in mind, the community is there because the product is killer. Like they really did it right on that product side.
Yeah. Were there any drawbacks or concerns you guys had, or like trade-offs you felt like you had to make by going with HyperEVM instead of like building on your own blockchain?
Yeah. So it's twofold. There are definite concerns, like, a testnet is one thing. The real product is another. So the timing of when that could happen is still an unknown. I think a lot of our risks are pre-mitigated though, given that we retooling rather than doing development to make it happen. Like we had everything ready to go for ourselves. And so it was a relatively straightforward approach to us, like, to elevating it to a new ecosystem. As Andy mentioned, we could have brought it to any chain. I think honestly though, like one of the biggest risks that we would, have to see overcome is the code base for the overall chain itself is still closed source. We still have no ability to glean into that. We know that they have 43 testnet validators currently producing blocks. We haven't seen a lot or heard much around there. The real risks are still on the centralizing aspects of things, that we need to see them actually, be true to their word and actually decentralize out. But I think a lot of that is mitigated by like who's actually interested in building here. It's really profound when you go look at who's in the Discord and who's been an early mover to this ecosystem. Like Hypurr Finance has a deployment here already. You look at the different RPC providers like Anchor and Alchemy. They're in the Discord. They're just like everybody else though. They don't get special treatment. The fact that no one's getting special treatment is actually, I think, one of the largest contributors to mitigating risk in this ecosystem, is that nobody has a key to the castle or has a backdoor into the ecosystem. Everybody must use the front door, just like I have to, just like Andy does, just like you would have to, Diana, if you wanted questions. And I think that really speaks to the potential here more than anything else, is that, most ecosystems you go to, have landed incumbents, and it's like, if you want to be an early mover, it's like, oh, well, like Aave and Compound and whoever have already been asked to come and deploy ahead of time, or they struck a deal for tokens to come and be an early participant. We're not seeing any of that at the current standpoint. Like, I know that I've even asked the team around getting help to, because we use the Gnosis Safe multisig. We wanted to make sure that people who deploy multisig wallets across chains can use the canonical deployment contract. And I was like, hey, how can we get this done? And they're like, oh, well, Gnosis Safe can do it whenever the chain launches. And I was like, okay, but like, is there any way we can give some preferential treatment to like the utility tooling that we all need? Because like, if you're telling me that it's going to be 2 weeks before Gnosis Safe is deployed on mainnet, that's 2 weeks before me and most other teams are going to be able to deploy our control structures, which we want to be on day zero. And so like that is actually like, while it's a frustrating pain point to deal with, gives me a lot of hope that saying like, oh wow, this is actually potentially really honestly truly being done properly, where no one's really being given like green light any special treatment.
That sort of centralizing concern, that's how it is with all the new L2s. There's no way to just launch with thousands of real validators that are highly performant. Like that's just not how it works. And we know that because we were working on launching our own chain. As we get more L2s and more roll-ups and like all these sorts of things, and every app gets its own chain, and we just, every wallet becomes its own chain, like that is a potential future where we live is it becomes so easy to deploy these and cheap too. It's going to get really, really cheap too. That's not the concern. The concern is like, where can people deliver? Like, where does this make the most sense? And so, we see that everywhere. We see that everywhere you go. Is that like, who's going to be here? How does it make sense? What's the infrastructure sort of thing? It's all the same concern.
Yeah.
The carnival will not be empty on day zero. Like, let's just say that. Like, there's so much initial traction happening here. Like, I've talked to a number of teams that aren't public about it yet, but they're all internally working on Hyperliquid strategies in terms of how to get their product or protocol ready to be there as soon as possible.
So we talked to these teams, like infrastructure teams who like aren't planning on being there. And because we were talking to them for the chain, and then we just start chatting about HyperFi and what we're doing. And they're like, oh, you guys are on Hyper? And then we're like, oh, you guys trade, and then it turns out they're whales and like they're ready to come on and they want to like learn about how the DeFi works. And we're not talking about their product at all. They're users and their community, and they want to figure out like, how do we do this together? And it's everywhere. It's everywhere across crypto. I've been very surprised how many conversations pop up. Plus the memes. The memes write themselves, Diana.
Yeah.
I know that you're like a dog first pod, and we're very dog friendly, but Hyperliquid, it has a purr in it. And so cats have emerged to the forefront. And so we named ours HyperRFi. Yield go purr. Come on, the memes write themselves. It's so easy.
They really do. And I have fully succumbed to the cat dominant nature of crypto. We were just at DevCon in Bangkok, and one of our main sponsors was Cross Cats, and all the videos I had to hold this big plushy cat, which is their mascot, Cupcakes. And I even brought Cupcakes all the way back to the US from Bangkok. Okay, like I traveled around Asia after Bangkok, brought Cupcakes everywhere with me, brought Cupcakes all the way back to the US. Cupcakes is now living in my house. There's a huge ass cat living in my house. Toby, it was my gift to Toby, who's my dog. I don't know if he really appreciated the gift that much, but all that to say, I've accepted the fact that crypto is a cat dominant community, and I'm just gonna have to deal with it.
I just listened to the episode, shout out OX Jim. Today, I listened to it this morning.
Oh, nice.
So,
yeah, it was a good one, right? Yeah.
I mean, I've been a cat on the internet for well over a decade at this point in time. And so it was a natural, slot in realizing that I've found my cat brethrens.
Yeah. It really was. There's also been like some few random people in the Rehash community who've been like trying to get the original cat on crypto Twitter, CL, on the podcast, which would be a really interesting, let's just say interesting episode.
I would tune in for that one.
Well, I'll keep my comments reserved. CL is a delight. Okay. So here's one DevCon story. We're at this house to go to, I don't know, just to hang out, and CL's coming. And so he messages the group chat. He's like, I'm buying dinner. Everybody show up. So, okay, great. Free dinner, whatever. That's nice. And so we show up, and he shows up with like 10 plastic grocery bags full of smaller plastic bags of soup. Like it was all just bags of soup, and you had to open it, and as soon as you open it, it was like falls apart, and like it was I'm not used to Thai takeout food. It was so much. It was a ridiculous amount. He found a bowl, and he did his best. I appreciate it very much.
I love that.
Bags and bags of soup. It was a lot. It's funny.
I love that. Maybe the alpha was to stick a straw in the bag and just slurp it out of a straw.
There was chopsticks only. I don't know what to do.
Chopsticks only. Okay.
Yeah.
Well, yeah.
I opted out of the soup. I chose to not. It looked quite messy. I had a lot of great Thai soup, but when I couldn't find a straw nor spoon nor bowl, I was like, okay.
Did you have some, Andy?
Just to say, just because I'm like, what am I gonna do?
So what was your strategy? How did you do it?
I just held it like this and kind of held it open, and then I dipped chopsticks in and would pull that things out, and then I would like hold the top and try to get a little broth, and it was
it tasty at least?
Yeah, it was fun.
Well, if CL makes it on Rehash one day, I'll definitely ask him about that and what the thinking around that was.
Sure.
Yeah. Shout out to the anon out there that CL used the credit card for to pay for it. Thank you.
Yes.
Much appreciated.
Much appreciated.
I love that. So HyperFi, when are you guys planning for it to launch? When can people go check it out?
We're on testnet right now. We're shipping an update
Nice.
that allows everyone to get access to the native gas token through a faucet. You can go to our website, or I guess rather hypur.fi, and check it out. Yeah, it's on Andy's name. It should be operational right now. The faucet, I think, is being deployed as I talk to y'all. So whether or not it's available right now, I'm not entirely certain if you can get gas. If you want gas, send me a DM on Twitter or tweet at me a wallet address. I'll send you over some testnet hype, and you can go kick the tires. We'll love any and all feedback. We're going to be shipping updates regularly around copy content, different experiences, and do a little bit of A/B testing while we're in this pre-mainnet phase. But yeah, we'll love anything and everything.
Yeah, and the goal is to launch on mainnet on HyperEVM day 0. Like that is the plan. We don't exactly know when that is, but we'll be there.
But neither does anybody else.
Yeah. Neither does anyone know, but you definitely will get the when launch DMs after this episode. So get ready for that, because that's what people love to do. Last question I've been asking every guest this season is just to give me one word for 2025. I kind of want a little bit more than that from you guys, just because you've both been in the space for so long and you've kind of studied the crypto cycles, and you might know more than just, like a random word that people have been throwing out. So give me your word for 2025, and then tell me what you're actually predicting is going to happen in 2025 based on what you know about just how crypto cycles work and where we're currently at in the cycle and where you expect us to go in the next year.
Stablecoins. 2025 is the year of stablecoins. Sorry to everyone's bags out there who I may be upsetting. We're going to see most likely a large drawdown in the overall market as hype and exuberance wanes. I think that'll be short-lived, but knowing these cycles, typically the old adage sell in May and go away. This could be the last time we see that, though. I think we actually have turned a page in the broader overall ecosystem around our industry's maturity. We have ETFs, financial products, services, everything coming online. But I think we're going to see a massive, massive growth in stablecoin volume.
I agree. Part of that is because of more mainstream adoption. I'm not getting any texts anymore about how do I buy? People are asking, okay, I have Bitcoin, what next? And so people are accepting of this on an individual level. As of today, Microsoft was voting. They voted no, but they're still voting on whether or not to hold Bitcoin on their balance sheet, one of the biggest companies in the world. And it's going to become more and more normalized. The Bitcoin Act, it might not pass, but it's in the US Congress. It's whether to just hold on to the Bitcoin that they have as a strategic reserve. These conversations are becoming way more mainstream and normalized. And even if the answers are no, the conversations that are happening, they pave the way for some really interesting new stuff. We should be able to do project launches that are fair and compliant and clear, that people understand the risks and they understand what they're doing, what they're getting into. And that's something that we can actually talk about legally in America as a company, let alone around the world. I think we're going to see a lot more of that, which will lead to probably more speculative dumps as well as pumps. I think that affects market cycle on both directions significantly. But the momentum is there, where we have people have seen this is a really interesting, cool technology in a lot of variety of ways. And I know it happened to FTX and to FTX. I don't want that. Can we do it better this time? And I think that is really starting to happen, and those conversations are happening. I also like rebirth of the awesome swag. Look at our shirts, Andrew. We're ridiculous. What's going on?
Oh, nice. I didn't even realize that was the last.
These aren't last. They're just different. We just wear crazy stuff. Just happens to be.
Happen to be, it's this is actually my favorite hoodie that I have. Shout out to Joseph, who made the Buffa Swag ones. I'm a Canadian, but I own and operate an American entity. I think America First Crypto is what we're going to see is becoming the norm for a lot of new incumbents. I think we're going to see onshoring of a lot of current establishment too. If Trump's policy around no capital gains on American issued crypto ever comes to pass, it will be the Yukon gold rush all over again. Whether or not we see that though in 2025, I'm not sure, but I've talked to a lot of founders who are not running American companies, and their immediate thought is, oh shit, if this does happen, then I'm at a disadvantage in terms of any assets that I may want to issue. I need an American compliant issuance plan yesterday. And so good things are definitely to come.
Yeah. Do you think the overall feel of 2025 is going to be similar to what we felt in 2021 with just, how fast the space was moving, how many people were coming in who weren't previously exposed to crypto, that sort of thing? Or do you think we're not quite there yet? Or maybe we'll never return to the days of 2021. It's just different.
I don't know, because part of that wild run up was it was still pretty hard to do everything. And so the people who wanted to be there, had to come intentionally, and NFTs and that that whole like art and culture thing was such a spike, and FTX and leverage, like it was all such a huge spike that it went so fast that once it kind of collapsed and everything, then it was like, well, where's all the infrastructure for this? Where's the base? Since then, people have been building the infrastructure. They've been building the UX. There's like safe off ramps. Like DeFi is relatively like stable. Like it has good Oracle support. Like a lot of the infrastructure is there. So I don't know. That's a big question to me. I wonder if it'll be a slightly slower ramp up and hopefully not a cool down or less of a fast cool down. But I don't know. I'm skeptical that it'll be that intense again. Could be wrong. Could be totally wrong.
Yeah. The velocity of 2021, I think, is really hard to recreate, but I'm very optimistic that we will see an influx of 2017 era capital raising, where I don't know if the ICO itself in its old form is coming back, but if you look at really ICOs were like the first real true product market fit category for crypto, decentralized or distributed capital allocation as a vehicle for funding. I think we're going to see a lot more innovation happening. Meme coin launches is what really gives me that conviction, is that people are allocating money to launch things like Fartcoin, and they go up to like 100-200 million dollar valuations seemingly on nothing. And
hot air rises.
So hot air rises. It does. That's a really good one. But if you could imagine being able to be legally compliant to raise capital as a company under similar structures, similar UX, similar tooling, that makes me incredibly bullish. Where you could have launch pads where you can just literally go put some money into these random coins that actually do something important, instead of just like get you into a Telegram that lets you post cat memes all day. I think it's definitely the way that we're going to go. The tooling, the ecosystem, everything is there, and with America turning the corner around its acceptance to the broader crypto ecosystem, I think is really going to be that catalyst fever for it.
Love it.
Ever tell you the meme coin story when I went to talk to the University of Michigan?
I don't think so.
I went to give a talk to University of Michigan Blockchain Club a couple months ago. Welcome to the Blockchain Club. This is what crypto is all about. This is why we do it. And I'm telling them about why it works, why it's decentralized, why that matters, and access and permissionlessness and all that stuff we love. And then I kind of ran down some of the tickers. Like, here's Bitcoin, here's what it does, here's how it works, here's ETH, here's what it does, here's how it works. And I went down like a few in the top 20 or something like that. And I got to Doge, and I was like, you guys know meme coins, right? And they were like, yeah. I was like, okay, well, what are some meme coins that you know? And they're like Dogecoin, and then they were like SHIB, and then they were like Pepe, and then they said Whiff, Bonk. And so they knew them, but not only that, they did them in that order. And if you go look at the market cap order, that's in market cap order. Their attention was ordered Doge, SHIB, Pepe, and then there's one more that like they missed Inu or something like that, but they got all the way down. And that sort of like stickiness in the brain, like that's what gives me conviction that crypto is sticky. And I don't think college students have that much capital to deploy into meme coins, and that's what's going to send us to the next stratosphere. But the stickiness of that and like the way they understand it gets them excited about it, so that when they're 2-3 years into their career, wherever it happens to be, and they're like, you know what, I'm going to allocate a little bit into ETH or whatever it happens to be, into Hype, into all this stuff. That's a really easy leap for them, so that we may see just never stop again. Who knows?
Yeah. Wow. That's impressive.
It was wild. Yeah.
If you told me 5 years ago the president-elect would be a DeFi founder or be buying ETH through a multisig, and I'd want to know what drugs you're on, and why aren't you sharing with the crowd? But that is the reality that we're in right now. Everybody is looking and talking about crypto. Most of the elected members of representative in the last election were supported by the pro-crypto PAC. We have become the mainstream audience. And that is something I honestly never thought we would get here as fast as we did. But the fact that we are, and it's still the most open place to come build and to cast your frontiers towards a fortune, I think, pivot from AI back to crypto. Let's go.
No, it's true. The fact that we had SEC Commissioner Hester Peirce on Rehash, a couple weeks or months ago, like that's wild to me. The fact that the SEC is coming on a small-ish crypto podcast, like what? Like what?
Diana, this is the best podcast. Come on. Sure, it's a
Thanks,
little
Andy.
small, but rich content.
Thank you. Well, yeah, thanks to you. Thanks to, this is your how many appearances have you made on Rehash so far?
I think this is 2. I don't.
This is only
I might
2?
have,
Oh,
actually,
okay.
I've been on some of the voting stuff, and I show up everywhere. Rehash community.
You're an active member of the community, so that's probably why I'm thinking that you've been on so many times. Thank you guys so much for taking the time coming on, telling us about HyperFi for the first time. Where can people find you both individually if they want to follow you, and then remind people again how they can go check out Hypurr Finance and how they can get some gas to use in the testnet if they want to test it out for you guys, and how can they keep up with everything you guys are building?
Hypurr.fi, Fi. It's in Andy's name. My name is how I am online. You can find me on Telegram and on Twitter. We'll have a faucet that lets you get some testnet gas and tokens that you can use in our lending market to mint coins or borrow whatever you want to do. That should be live later today, if not tomorrow morning. The UI work is done. We're just spinning the service up right now to deliver. And then our socials are associated to our Twitter handles as well. I think Andy's is also based on his name as well. So come check us out. Ask any questions. Join our Telegram as well, which is available through through Twitter. Should have all socials that you need there. And ultimately, just now, come be active.
Like the Hyperliquid ecosystem, everybody who's building is working together and forming this network. So now's the time, like join the Telegram, hypurr.fi, and there will be links to the Telegram, to the Twitter. Follow us and engage in those conversations. If there's something you don't understand, ask the question. If I've answered it already, I don't care. That's content for me. I get to answer it again and teach more people. So please, now is the time. You have this opportunity to ask any question. If you skip DeFi summer and you want to learn how it works, come learn how it works. The resources are there. The testnet is there. You can practice. You can kind of figure out what it is. This is like an opportunity. I really can't emphasize that enough. I try to in DMs with my friends. I'm bothering them come on, show up here. But now really is the time of seeing this is how this thing is going to work and learning how it's going to work. So yeah, find us.
Thank you guys again so much for taking the time, for educating us on all things DeFi and what the future is going to hold for us. And thank you everybody for tuning in. Yeah, thank you DeFi Beats for creating hats, DeFi Beats and hats for creating this fun contest and getting these two guys on. Thank you to our listeners, of course. We would not be here without you guys. So thank you so much. And we'll be back again next week with, I believe, our final episode of season 10. But we do have a bunch of other just little content coming, stuff that we recorded back in Bangkok, and even some more stuff that we recorded back in MCon that hasn't come out yet. So lots and lots of content coming out still. We will be back again soon with some more content. So talk to you guys soon. Thank you for tuning in to this episode of Rehash. Rehash is hosted and produced by me, Diana Chen, and supported by our community of NFT holders who curate our guest lineup each season. To get involved, head over to our website at rehashweb3.xyz and collect this episode as an NFT. Anyone who collects an episode becomes part of the Rehash community and will be able to nominate guests for future seasons. Also, be sure to follow us on Twitter, Instagram, and TikTok at RehashWeb3 or on Warpcast and Lens at Rehash, and join our community on Telegram at t.me/RehashWeb3 to hash it out with fellow listeners. If you enjoyed this episode, please rate, review, and subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts. Thanks again for listening, and we'll see you again next time.